Hi guys, welcome to another one of our gold videos. Basically what we are doing is selling rallies in gold until it says otherwise. We are expecting gold to hit a certain trend line. This one here, we've found resistance a few times, bounced off back test and then it went on a bull run. So we know that's a significant one. A low move actually bounced there twice. Couldn't quite get above it the first time of asking. When it did, it blew through it. So we know that is an important trend line. If you're trading gold, make sure that you've got the same trend line because we expect price will come down to here. There's another reason as to why, and we'll go through that in the video. So we are expecting next week to be a bearish week for gold. This is the other reason. Bollinger Bands act as targets. So once you get halfway down a Bollinger Band, the bottom band becomes a target, which is around 1180 odd on the weekly chart. That is probably where gold is going to end up. And if we just refer back to the daily chart, that price pretty much is where that trend line is. By the time we get to that trend line, it'll probably be around that price, which is the bottom Bollinger Band on the weekly. So two technical reasons why the price could get that low or end up at that price if the price continues to fall next week, which looks like it might well be doing. Let's have a little look at gold a bit deeper. Right, so there's quite a few patterns on here that we should be considering, and the main one at the moment is the current one, and that is a resistance point that we are at. This is Friday the 9th of August. We are right at that red resistance line now. We are testing it. If the market fails, that will be an ideal place to go short. We have got, which we're going to draw here, what looks like a bit of a huge bear flag. Now, we have tutorials on these if you're not familiar with chart patterns. There's been quite a few on gold. We'll highlight another one after this one as well, just to show you how they pretty much work and what we expect to happen. But we're going to go through quite a bit on this little section of our video because there's a lot on here that can dictate what's going to happen next. So as you can see, what happens most of the time when we fall out one of these bear flags. So what we anticipate, until the market shows otherwise, we anticipate that red line will fail and we will end up coming down and falling out of that bear flag. The green line, we actually updated a chart a few days ago on our forum saying that we thought that 1270 would be a point where the market could bounce. We didn't say it definitely would, but we said it could. That's exactly what happened. I think it come down to 1271 or something like that, and then it bounced, had quite a big up day. We cannot exclude a small head and shoulders forming. That would be a catalyst to get that the price to touch that trend line that we spoke about just a minute ago. So keep an eye on that. And if we look at the long term, in the 70s, gold went on a bull run, formed a pyramid. Now, sort of 2000, 2001, we went on something like an 11-year bull run on gold. This is a bubble. This chart will end up looking like a complete pyramid. This is why we have been saying on Facebook and on our website, $1,000 per ounce in gold will come. It might come the end of 2013. Don't know. Timescales are hard to guess. But we are selling short all the way down to $1,000 per ounce. 300 points on gold is what we look to make. This will form a complete pyramid. It always happens the whole cycle. It's an economic cycle. There's lots of gold bugs out there saying no, they're printing money, etc. But yes, the price run away with the fundamentals. We can go into this in more detail another time, but there's always news behind a bubble like this, but gold will come down to $1,000 per ounce. It probably will even go lower, but what will probably cause that is if they start raising interest rates, that is deflationary. So basically what you'll get is the currencies will strengthen and then gold won't be a safe haven anymore. So gold will come down. That may be the catalyst to moving gold down. But this is a chart for Sentiment Egypt. This is a UK listed company. You can see here how the price it had a sell-off come back down, and then it formed a complete pyramid. Markets do this quite often. They form complete pyramids. This is still in a bear market, so you'd still be selling the rallies. We've got another example as well of and that might end up testing that trend line again. We've not really been charting that, but if any of our members request a chart, then we will do one for them. This is BPC, Bahamian Oil Company. You can see it pretty much made a complete pyramid again. So this is all to do with the cycles that the stock markets and things like that, commodity markets can sometimes, they don't always form pyramids like this, but anything that shoots up normally forms a complete pyramid by shooting down. And just because we're running out of time on this video, we've got a We Make Mints Facebook page. We put all sorts of updates on here. If there's a big move in the stock market, we'll post why there was a big move in the stock market. We follow gold. Anyone trading gold, we are always trading gold. So if you come on to Facebook, search for We Make Mints. We'll even put a link in our description for this video. There's all sorts of facts on here. One of our traders is doing an economics degree, so there's all sorts of things that we're uploading. So come on and like us on We Make Mints on Facebook. There's all sorts of things, as we say, that you'll learn. We're getting up to 36 likes. You know, We Make Mints is doing the rounds now. People are starting to come on to We Make Mints and like us and follow the news that we post. So if you're trading gold, give us a like.